Assistance is run by investment bankers, and Morningstar's tools can help make
Hi, I'm Bridget Hughes with Morningstar, and we're here today with Robert Hagstrom of Legg Mason Capital Management Growth Trust. Robert, thanks for joining us today.
Bridget, nice to see you.
Good. I've read your latest quarterly commentary, and in that you talk about positioning the fund in the high quality growth stocks that you undertook about a year or so ago. Mm-hmm. Is that still how the portfolio is positioned?
Yes, we made the investment in high quality stocks, I guess, at the end of 2008. It actually worked out relatively well in 2009, even though I think the high quality growth stocks have not yet reset to what we think is fair value. So the fund, yes, is still very much a large cap, high quality growth portfolio.
And let's talk about interest rates.
Yeah.
Most people expect interest rates to increase.
Yeah.
Now, you talked about your portfolio in terms of duration.
Yes.
Can you?
Well, it's a novel concept. If you think about a bond manager, think about a fixed income manager, and they think about duration, how many short-term bonds versus long-term bonds. And when interest rates rise, they all know that they need to shorten their maturities so they're not harmed by the rise in interest rates. We've looked at the research and how this might affect stock portfolios. There's some good academic research here. And what is interesting is that when interest rates rise, typically the sensitivity of the portfolio is much higher in high PE stocks, what is typically growth stocks. You think about them as long duration assets. So if you think that interest rates are going to rise, you want to start to shorten the duration of your portfolio. You want to move into higher free cash flow companies that act more like short-term bonds than long-term bonds. So it's something, we don't have a forecast about interest rates this year, but if interest rates were to start to rise, you'd want to favor the short duration, high free cash flow stocks.
And as a growth manager, though, and you're always thinking about the secular growth trends that are out there. What are one of the trends that you're most excited about today?
Yeah, although if you said to me the one area in technology that probably has the highest growth rate potential over the next many years, it's going to be in cloud computing. It's a new concept where you can outsource your computer needs, whether it be software, email, the servers that you use. All this now can be done by other companies, whether it's Amazon, believe it or not, Amazon.com, a company that we own, Rackspace is in this business, Microsoft is in the business, and IBM is coming, Hewlett-Packard's going to come in. It's going to be a day where there will be very few companies that actually need to run their servers and softwares in-house. It'll be much cheaper to outsource it to someone else, and it'll be lower cost for you to do so. That is a huge business, Bridget, that's going to last for many years, and it's global. It's something that's not only going to happen here in the U.S., but across the globe, and it's going to last for many, many, many years. So this is going to be a very exciting secular growth story to come.
Okay, and how do you see that playing out already in Amazon?
Yeah, well, the fastest ramp, it's interesting, we had a very bad recession last year, the worst recession since the Great Depression. Cloud computing actually grew 28% year over year. Amazon had tremendous growth rates in their cloud computing division. Rackspace grew over 30%. Where we're seeing in cloud computing is that smaller businesses are adopting cloud computing first, and they're going to the smaller providers. It's going to be a while before the Fortune 1000 companies do it, but it will come. They will get there, and then the Microsofts and IBM and HPs will benefit as well.
Okay, well, thank you so much, Robert, and thank you for coming in.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.